In this video, traders can talk about trading gold. Stay tuned. Hey guys, welcome to you. Thank you for joining me. All right, so gold, super popular market for day traders, swing traders, of course, investors. Now, from my perspective, I like trading gold, but I seem to be very, very active at certain periods and then I don't touch it for a long period of time. So I've always got levels that I'm interested in. I've always got it on my watch list. I've always got it on my charts. I kind of put the alerts on levels that are interesting and it seems to stagnate for a bit. But then when it kicks into gear, boy, is it a really good trading vehicle. When it starts to break out of ranges, when you start to get money flowing in or out of it, it does trade very nicely and often very cleanly. So, in my opinion, it's well worth having on your watch list. So we're going to have a look at some of the concepts behind gold, some spreads, how it all works, the reasons why it moves, and I also want to share with you something I've found works pretty recently in terms of a setup and a strategy using a moving average. So stick around for that one. So this video is sponsored by our channel sponsor, Core Spreads Australia. If you haven't checked them out, why not? Go check them out. There's a link to them in the description below. Decent, tight spreads, a good, simple Core Trader 2 platform. It's just really a simple execution venue for traders who are so serious about their trading. Go in, do your trades, no frills, get out of there, decent, tight spreads and good margins as well, which we'll see in a moment. So a spreader and Core Spreads Australia, use that as an example. It's 3 points. So for example, the quote would be on the bid 1466.3 to 1466.6, margin 0.7%, very competitive margin. Now you can trade it via a futures contract. GC is a futures contract, but the spread on there is a point in the market and you've got to pay your commission, so you're not far off really what the spread is here, and you are kind of a little bit more flexible as well because your position size isn't fixed to the fixed contract position size. You can trade it via an ETF as well, but obviously that's a US broker required for that. GLD, slightly different, but it's a little bit of exposure to gold. So this is a really decent way of getting exposure to gold, especially if you're a short-term trader or a medium-term swing trader. I guess you're still worth doing it through this kind of contract. All right, so let's have a quick example before we hit the screens. I want to show you this nice little kind of thing with a moving average that I've spotted recently. Okay, so for example, gold's trading at 1456.1. You think you want to go long, you go long, £5 a point, and it suddenly shoots up over the next 15-20 minutes. You're day trading this, of course, the order of magnitude would be more if you were swing trading it. But let's just say you're kind of jobbing around a little bit intraday, £5 a point. Close up to 1458.4. That's $2.30 move on gold. 23 points effectively, because that's how it's worked out. 23 points times your position size, which is £5. Total profit there of £115 for that relatively small move. Now, of course, if it went against you, you would obviously have a losing trade, but that's how trading works, right, guys? Okay, so actually, before we get onto this, let's hit the screens now. Let me show you this moving average trick. Okay, traders, I want to show you this because actually this is happening literally on the day I'm filming this video, and I want to share it with you guys because it's something that happens quite a lot and it's well worth looking at. So share it with you and you guys can look at it, explore the concept a bit more or discard it. So I'm in the Core Spreads Australia platform, Core Trader 2, and I'm on the gold rolling spot. I'm going to flick open a chart here, and basic chart, this is a 1 minute chart, so this is for kind of timing your swing trades or for day trading, depending as you prefer. Now, literally this has just happened kind of a few hours ago. We had a catalyst that was positive for stocks. So as I mentioned, risk on is where you get, a positive move in stocks and gold tends to decline. Gold will kind of see a lot more risk off action. So if there's a lot more risk off, i.e. people are fearful, they'll buy gold. So this was the opposite. A lot of kind of risk on, people were risk seeking, and so gold took a hit. Now it happened to be some sort of catalyst. In this case, it was Trump talking about the tariffs on Twitter, gave stocks a 200-point plus rally on the Dow. So gold's taking a hit. Regardless of what it is, the point is it was a catalyst event that was hitting gold. And this is a 1 minute chart. And now a lot of traders like to kind of jump on these moves, like to either look for a position to fade the moves, but they like to trade the move. And so we get this, risk on, big move down in gold. And if you stick on a moving average, so you go to a standard moving average and you have a 10 period, and remember this is a 1 minute chart, so this is quite a tight way of looking at things, but it works really well. It's worked a long time as well before, but particularly today I thought it's well worth sharing. We get the drive lower. Now some people will take the short on the first pullback, some people will be shorting looking for new lows, some people will be looking for some reason to get long and trade it counter trend potentially. Now I'm not going to kind of make assumptions one way or the other on that, but what I want to show you is this is a 10 period moving average on a 1 minute chart. How interesting is it that gold will stay below that moving average and won't sort of change direction or stagnate until you get a close above it? So in other words, if you happen to be short after this kind of pullback or later in the move, whatever it is, you literally can stay short in this example, and actually, you know, it's something to definitely put a bit more investigation into until you get a close above it. Now there was almost a possible close there, but I don't think it did. I think the first close really was down here. So if you're short here, you might normally be your impulse might be to take it out on a little move lower and think, oh, it's come a long way down, or even this, oh, it's a big move, you know, it's a big $5 move, you know, that's a decent couple of grand I'm going to put in my pocket and move on. Well, you know, if you stuck to this and said, listen, let me be guided by the 10 period moving average, whilst the price has not closed above it, I will hold it, you know, you've actually then got another kind of $5 in the trade. And if you were deciding to trade a counter trend type trade for a longer term position, I think you've got to be careful, obviously just fighting a brutal down move. But if you're looking for a time when it was going to stagnate, then again, if you weren't involved in the short, maybe you'd start to think, well, okay, this is the first indicator that maybe we're turning, maybe we're due a counter trend rally. And of course, stop below the low. If you did that, you had some sort of counter trend rally. Now, you know, that's up to you and a kind of commercial decision for you to make with your trading. But I wanted to point it out, very often, guys, gold will hug this 10 period moving average on a 1 minute chart. Also a little bit on a daily as well, to be fair, but I want to show you the 1 minute if you're timing those entries. And you know, it can often keep you on the right side of the market, keep you in the trade if you're in the trade, and keep you patient and waiting for your best sweet spot entry rather than jumping in too early. Because you know what it's like, guys, jump in too early, you get stopped out, then it happens to be the turn and it can be all frustrating. So useful, worth looking at, have an investigate into that. All right, guys, so that's quite a useful tool. I think it's well worth looking at, especially when you do get those, you know, strong extended moves, momentum moves, some sort of catalyst with it. Before we go, it's worth mentioning the kind of things that affect gold. So gold is generally seen as a risk-off type trade. So when people are a bit more fearful, they come into gold, seen as an inflation hedge. Now, I'm generalizing with this broadly because sometimes it uncouples a bit. Sometimes you find, you know, stocks rallying aggressively and gold just sitting there, or even gold rallying a little bit. But traditionally speaking, if it's a big momentum event that's really bullish for the stocks, then gold's going to take a hammering. If it's economic data that's really bearish for stocks, gold will spike. That's broadly speaking, not always, but that's broadly how it is. So it seems a risk-off asset, inflation hedge, and generally trends up when people are fearful and trends down when people are risk seeking, because they're going to buy all the underlying stocks and assets that go with risk, and they're going to come out of gold. That's the way that rotation works. So gold's well worth looking at, guys. It's well worth sticking on your watch list. Easy to do if you're using the Core Trader 2 platform. Easy to trade as well. By the way, if you haven't checked out these guys, do so. Link to them in the description below. Core Spreads Australia, worth a look. Take care. Bye-bye.